Hey YouTube, about 2 weeks ago I did this video in which I talked about a stock that I picked for my etoro investors which has gone up about 25% in 11 days. Well, guess what? The stock is now up about 46% since I bought it a few weeks back. So the purpose of this video is not to brag about that pick, but rather I want to go through the thought process which led me to that pick. In particular, I want to address the claims that value investing is dead, because it is exactly value investing that led me to picking that stock. There's a lot of talk on YouTube nowadays that value investing is dead. Some even claim that Warren Buffett is washed up. I don't agree with this. But I think it really has to do with looking at the definition of what value investing is all about. How can buying something cheaper for what it's worth and then holding on to it until it appreciates in value be a dumb thing to do? Of course, if you're only looking at a certain metric like price to book ratio and you're trying to buy something that's lower than its book value, that may not be the right approach or the right interpretation of value investing. For me, even when I buy a so-called expensive stock, I'm buying it because I think its value can go up a few years down the road. I don't really like titles of value investing or growth investing or any other kind of investing. As Charlie Munger says, all intelligent investing is value investing, plain and simple. As long as I'm buying something that I think has good prospects and that can significantly increase in value over the long term, you can call it what you want, but that is the intelligent way to invest. And the other thing I will add is that I'm not hoping for it to appreciate in value. I'm expecting it based on facts, based on rationality, and of course based on its long-term prospects. So that was the thinking that led me to pick Baolong, which has risen about 46% as I mentioned. It was trading at a very decent price, and I'll look at the valuation again today even after this meteoric rise. It has good long-term secular tailwinds because it's dealing with e-commerce. It is still early in its penetration in terms of providing its e-commerce services to more merchants within China, and of course towards international merchants who are looking to expand their e-commerce services in China. If Shopify can trade at a price to sales ratio of about 55 times earnings, I think Baolong had a good chance of appreciating in value as well. It was very undervalued in my opinion compared to a lot of other peers. And also, I thought there was a margin of safety when I first invested in it. Of course, Baolong could still fall. It could fall back to even where I bought it. That may depend a lot on market circumstances beyond its control, especially in terms of the external environment. But I'm confident Baolong will not collapse completely. It is not like a Carnival Corporation or a Hertz Corporation that could potentially go bankrupt. It had a decent balance sheet, and like I mentioned, it has very strong secular tailwinds. It is the market leader as well in the services it provides in China, and the price I bought it at provided a very safe margin of safety. It's not often that you find opportunities like these, but when you do, it's best to go aggressively into them. Some of my other speculative plays like Trilio and Beyond Meat for my Project 1 million portfolio were also bought when I saw that there was some margin of safety in buying them. So I am careful about the price I'm willing to pay for a stock. Perhaps I'm not as obsessed on the price as other very traditional value investors, but I still want some margin of safety in the valuation. I think beyond just looking at the book value perhaps of stock, other things can also play a factor in providing that margin of safety, like the revenue growth or the balance sheet, and of course the long-term prospects of that stock. So does Baolong still have that margin of safety? let's take a look and apply the modified rule of 40 that I recently talked about. So to apply that modified rule of 40, we'll need the sales growth, which is about 18.4%. We'll need the operating margin, which is 4.5, and we also use the price to sales ratio, which is about 2.16. So the revenue growth 18.4 plus the operating margin is 22.9. I have to say though that this revenue growth is during a very slow quarter, is during the pandemic quarter. So I expect this to actually be higher in the current quarter and in coming quarters. Nonetheless, it fails the first part of the test. It doesn't hit 40. So 22.9 plus divided by 2.16, the price to sales ratio gives us 10.6. This way exceeds the minimum requirement of 5 for the second part of the test. So it does still seem undervalued or fairly valued based on the second part of the modified rule of 40 test. So for me, Baolong is still a hold. I expect it to still be volatile going forward, but if it does dip big, I might even buy some for my Project 1 million portfolio, or maybe I'll sell another put option on it. Let me know what you think about value investing and about my pick in Baolong in the comments below. If you would like to be a patron and a supporter of the channel, jump over to our Patreon website and you can subscribe to one of our membership levels. You can also gain personal access through me and also my immediate thoughts and actions in the stock market through Discord at about $5 per month. We look forward to seeing you on the Discord chat. So if you like what you saw in this video, please give this video a thumbs up. Please subscribe to the channel if you have not, so for future updates. And if you like the general platform, the etoro platform, and you like the ability to copy good investors, I suggest you join the etoro platform. You can use my link in the description tab, and you can even get an extra $50 to start trading. So thank you for watching. I hope you took away some good points from this video. I hope you stay with us on this journey, this long-term journey, and we'll see you in the next video.